You billed $80,000 last year. On paper, that's a great income. So why does your bank account look like you're barely scraping by? Why does every client payment feel like it evaporates in 48 hours? Rent, taxes, software subscriptions, that one invoice you're still chasing from March. If $80,000 feels like $40,000 in your actual life, you don't have an income problem. You have a system problem. And by the end of this video, you'll know exactly how to fix it. If you're a freelancer, a contractor, or you run a small business where you invoice clients instead of collecting a steady paycheck, this is for you. Not the 9-to-5 employee with taxes withheld automatically and a bi-weekly deposit they can set a clock to. This is for the person whose income shows up in unpredictable chunks, whose boss is a rotating cast of clients, and whose tax bill isn't a mystery someone else solves for you. Here's the promise. This isn't about earning more. You don't need a $150,000 year to feel secure. You need a system that turns whatever you earn into something predictable, protected, and calm. By the end of this video, you'll have a framework to turn your $80,000 of chaos into $80,000 of control. Not richer, steadier. And steadier is what actually buys you freedom. Let's talk about why $80,000 disappears. First, irregular income. A W-2 employee gets 26 identical paychecks a year. You might get $12,000 in March and $400 in April. Your brain and your bank account were never built for that kind of income lumpiness, so you overspend in the good months and panic in the bad ones. Second, quarterly taxes. Nobody withholds anything for you. That $80,000 isn't $80,000. A chunk of it was never yours to spend, and if you didn't set it aside, the IRS is going to come collect it anyway, usually at the worst possible time with penalties attached. Third, the blending problem. Your business checking account and your personal checking account are probably the same account, or close enough that it doesn't matter. Every client payment gets absorbed into money, and money becomes rent, groceries, that software subscription you forgot about, and a business expense, all indistinguishable from each other. Fourth, no safety net. No employer-sponsored anything. No sick pay. No guaranteed next paycheck. So every dollar carries this invisible anxiety tax. Even the good months feel fragile because you know a slow month is always one bad client away. $80,000 isn't the problem. The absence of a system around that $80,000 is the problem. Let's build one. Step 1. Pay yourself a salary, not a windfall. Set up a separate business checking account. Every client payment lands there first, never directly into personal checking. From that account, pay yourself a fixed, boring, predictable salary on a set schedule weekly or twice a month, regardless of how much came in that particular week. This single move converts your income from lumpy and terrifying into smooth and boring. Your personal life, rent, groceries, the gym membership, only ever sees a steady number. The chaos of client payment stays contained in the business account, where it belongs. Say you bring in $6,500 one month and $2,000 the next. Instead of living off whatever hit the account that week, you pay yourself a flat $3,500 a month from the business account. The good month builds a buffer in the business account. The slow month draws from that buffer. Your personal life never feels the swing. This is the single biggest freedom upgrade available to you. Not more income, just income that behaves. Step 2. Automate your tax set aside the moment money lands. The instant a client payment hits your business account, automatically transfer 25 to 30% into a separate, untouchable tax savings account. Set up the automation so it happens before you even see the money as available. You're not saving for taxes, you're removing money that was never yours in the first place. If it's automated, it never becomes a decision you make in a moment of temptation. It just isn't there to spend. A $4,000 invoice clears. $1,000 to $1,200 moves immediately to your tax account. You now know with certainty that the remaining $2,800 to $3,000 is genuinely yours to run your business and pay yourself from. No April surprises. No scrambling. No penalty notices. This is what turns tax season from a horror movie into a Tuesday. Step 3. Build a feast buffer. Not just an emergency fund. Alongside a normal emergency fund, build a specific buffer inside your business account size to your worst historical slow month. Not your average month, your worst one. This is the money that lets your salary in step 1 stay flat even when client work dries up. A generic emergency fund is built for job loss. You don't lose your job, you lose momentum. Feast or famine is the default state of running a business, not an emergency. This buffer is designed for the normal rhythm of your income, not a rare catastrophe. If your worst month in the last 2 years brought in $1,800 against $3,500 in personal salary needs, your feast buffer target is at least that $1,700 gap, ideally times 2 or 3 months. Once it's funded, a slow month is a non-event instead of a crisis. Step 4. Separate every dollar into its job. Within your business account structure, split incoming revenue into labeled buckets the moment it arrives. Owner pay, taxes, operating expenses, profit, and buffer. Many banking apps let you do this with subaccounts or envelopes automatically. When every dollar has a job before you can spend it on the wrong one, you stop accidentally funding your personal lifestyle with money that was earmarked for taxes or software renewals. This is how business owners avoid the classic mistake of, the business made money but I have no idea where it went. On a $5,000 invoice, $1,300 to taxes, $500 to operating expenses, software, contractor help, tools, and $3,200 split between owner pay and profit buffer. You know exactly what's spendable and what's spoken for before you've spent a cent. Step 5. Review your numbers like a CEO monthly. Once a month, spend 30 minutes reviewing total revenue, total tax set aside, total buffer growth, and profit. Not to judge yourself, to run your business like a business instead of reacting to whatever's in your checking account that day. Employees get pay stubs and benefit statements that tell them where they stand. You have to build that clarity yourself. A monthly review is the closest thing to a company update for a business of one, and it's the difference between reacting to money and directing it. One freelancer doing this review noticed 3 months in a row where operating expenses quietly crept from $400 to $900. Subscriptions she'd forgotten she still had. Cutting them added nearly $500 a month straight back to her owner pay, without earning a single extra dollar. Think about a freelance graphic designer billing exactly $80,000 a year. Before this system, feast months meant nice dinners and impulse software purchases. Famine months meant real fear, dipping into money that was quietly owed to the IRS. Tax season was a $6,000 gut punch, financed with a credit card, because nothing had been set aside. After building this system, same $80,000, completely different life. A flat $4,200 monthly paycheck. Taxes automatically set aside with every invoice, so April is a formality, not a crisis. A feast buffer that absorbed 2 genuinely slow months without a single sleepless night. Nothing about her income changed. Everything about her relationship to it did. Let's recap. Separate business and personal accounts, and pay yourself a flat salary. Automate your tax set aside the second money lands. Build a feast buffer size to your worst month, not your average one. Give every dollar a job the moment it arrives. And review your numbers monthly like the CEO of your own business, because that's exactly what you are. $80,000 was never the ceiling holding you back. The absence of a system was. You don't need a bigger client roster to feel secure. You need to start running your income like a business owner, not like someone waiting to see what's left over at the end of the month. If this helped you see your money differently, hit subscribe. This channel is entirely built for freelancers and small business owners figuring this exact stuff out every week. And before you go, comment below with the number of buckets your income currently gets split into: 1, 2, or none at all. I read every one, and next week I'm breaking down exactly how much to actually set aside for taxes based on your real tax bracket, not just a flat guess. Subscribe so you don't miss it.